Hey everybody, quick update video for you. The Federal Reserve just met and they announced a 0.25% interest rate cut on the FFR, the federal funds rate. And everybody saw this coming. If you looked at the CME Fed Watch tool, which I implore everybody to take a look at, it just tracks the likelihood of an FFR cut. This was virtually guaranteed. I don't think that's really the pressing matter or the question. The real question is why? Why is the Federal Reserve cutting their FFR, their interest rates, when inflation is most recently on the CPI at 3%? That, just for reference, is an entire percentage point higher than where the Federal Reserve wants it. And some people might say, well, it's just it's just a percent higher. It is 50% higher than their 2% target. Okay, just to put it into reference, we are nowhere near the Federal Reserve's target rate of 2%. And in my opinion, I genuinely think 3% is going to become the new target over the next 5 to 10 years because we have an economy that's built on a house of cards. And when you have an economy built on cheap money, inflation is just part of the system. Now, the answer to this question is that the jobs market right now is horrible. And the jobs market not only right now is horrible, but because of all the revisions, the BLS revised last year's jobs numbers down by 911,000. Okay, 911,000 jobs, poof, just didn't exist. So when you add all that up, what everybody, people in the workforce, they've been saying this for months. You may have been saying this. The jobs market is not as strong as the data suggested. And now the data has been revised to prove that. So the Federal Reserve is stuck between a rock and a hard place. They need to cut interest rates because they need to prop up the job market, which is only getting weaker by the month, while at the same time, inflation is nowhere near their target. What is that? That is the textbook definition of stagflation. Stagflation is the economy's worst nightmare. And I've said this many times on this channel, we have never been closer in decades to stagflation. Now, I don't think that we're there yet. But we are riding the line, okay? And I think 2026, unfortunately, is just not going to be a good economic year. And what pisses me off is, I've been making videos on the economy for a couple years now, but I've been in this space. I have a degree in finance. Over the last decade, pretty much of experience in this field. I don't remember the last time I've been able to say, next year looks good for the economy. I mean, it is problem after problem. It is obstacle after obstacle for the average American. Whether that is a shitty jobs market, whether that is inflation through the roof, whether that is houses that are just more and more unaffordable, whether that is the 2008 recession and then the 2020, financial crisis. It is nonstop. And unfortunately, 2026 does not look any better. And the Federal Reserve is just forced to, their hand is forced because the jobs market is so bad, while inflation is still high. So it is a recipe for disaster next year. And I'm sure we're just going to print our way out of it, because that is what we do every single time we run into financial problems as a nation. We just print our way out of it. And all that is doing is just kicking the can down the road for the eventual crisis that's going to be horrible, because there is so much inflation, liquidity, and just money that has been printed into an economy that cannot sustain it. And then you have the Federal Reserve very much about to end their quantitative tightening program. I made a video on that before, and I got some comments that were like, oh, that doesn't mean that they're going to start quantitative easing. Let's just wait and see how the 2026 economy is, and then if the jobs market keeps getting worse and worse, you tell me if they're not going to start quantitative easing and start up the money printers. Look, I'm not going to drag this video out longer than it needs to be. It's infuriating to see the economy in the state that it is, and it just doesn't seem to improve for the average American. So if you are blessed to have a roof over your head, if you are blessed to have a job, or if you are blessed to even just barely get by, hold on to that, because 2026 is going to be rough. I think everybody knows that, and the Federal Reserve is going to be forced to cut their FFR again, very likely at the next meeting, which is only going to exacerbate the problem of inflation while the jobs market is falling apart. I have nothing else for you guys. I'll leave it at that. If you like personal finance, world economics, investing, you're in the right place. I didn't say this at the beginning of the video, but my name's Derek. I got my degree in finance, so you don't have to. If this video was informative, if you agreed, if you disagreed, that's fine. Civil discourse is important. Please consider subscribing. It helps the channel tremendously. It's difficult to grow here on YouTube, so every subscription means the world to me. With that said, I hope you have a fantastic rest of your day. Even though this economy is crazy, I will see you in the next video, which is usually weekly, but lately it's been much more. Again, because the economy there's just so much crazy stuff going on right now. So I'll probably see you in the next video tomorrow or the next day. With that said, I hope you have a fantastic rest of your day. Take care.